Hey folks, Dan Frio here, the Mortgage Update, and look what the market did today. Gotta love it. Bunch of Fed news out, housing news, and other things. So don't go away. Be right back. Hey folks, some exciting news today. Got a new office. And starting next week, we're going to have a whole new camera system. So we're upgrading. So thanks to you guys for watching, supporting, and allowing me to come into your homes and help you with your homes. So let's get on it. What happened today? Well, again on this channel, what we watch is, or we follow, is the MBS markets, the mortgage-backed securities market. I forgot last night. So if you're new to the channel last night, I didn't explain what the MBS markets are. The MBS market is actually the bond, and it's an investment that people buy, like stocks or bonds. And that the mortgage-backed security is the bond instrument that dictates or determines mortgage rates. So this number that we follow here is the price of a bond. The more or higher you pay for a bond, the lower the yield that you're going to receive. So we love when the price goes up. And look at the trend that we have going on right now. This is crazy. It's one of the longest trends that I've seen in a long time. So again, I always say on the channel, pigs get fat, hogs get slaughtered. So watch, be careful. We're putting everybody on the radar right now of looking to possibly lock in if we see any dips at all. So what happened in the market today? Well, housing numbers came in, and look at the numbers that came in here. The previous housing numbers, the market was up 1.2%. The consensus was we're going to cool down a little bit, and we were looking at a 0.5 increase. We actually dropped 4.9%. Don't know why, but that's a soft housing market. However, permits and construction and everything is booming. So I don't see that playing a long-term effect on anything, really. Tomorrow we're going to see some employment numbers come out. I don't see any dramatic changes there. But what caused today's effect? Well, one of the things is the Fed. The Fed came out today and said they're not doing anything. They're not going to do anything. What they are going to do, which was kind of cool, I don't know if I can find it in here, but they're going to continue their bond purchases to keep rates low. Okay? So you're getting a fantastic opportunity to lock in at these rates. I just sent out a newsletter just now saying our rates are lower today than they were a year ago. And I can back that up basically back through here. CNBC actually announced it. And I'm just posted this out through a newsletter to all of my clients saying you have a great opportunity here to refinance. Even if you bought the house or refinanced last year, a lot of times here's what I get when people say, well, you know, Dan, I just did it. Is it worthwhile? Let's look, because it might not be. Many times it is. So what will happen is, let's say you made 10 payments, okay? But rates went down. They're down 1 full percent. Let's go in and see between the 10 payments you made, the closing costs you made. You're going to skip some payments, which is good. You're going to have a lower payment. So let's say you refinance. Just look at this. Here's one thing I always try to advise my clients. If you're comfortable making your payments now, that's one of the things I ask. How's your payment now? Are you comfortable with that payment? Many of them say, yeah, it's not bad, but I'd like to get it lower. Well, do you really need to get it lower, or you just prefer that? Well, I want a lower rate, thus have a lower payment. Well, let's look at it another way. How about if we got you a lower rate, but you continue to pay the same payment? So let's say your payment goes down $100 or $150. You send in an extra $100 and $150 a month. Let's say, for argument's sake, so you're going to cut 5 years off of the term of your loan. Okay, 5 years. You're continuing making the same payment you're paying now, but you refinance at the lower rate. Okay, so the refinance cost you $3,000-4,000 to do. Just say. Okay, but you're cutting 5 years off the term of your loan. So let's say, for argument's sakes, your payment is $1,000 a month. You pay off your loan 5 years early, or 60 payments early. You're saving $60,000 for a $3,000 cost. Great trading. So that's many times what I try to advise my clients. Let's not take the lower payment. Let's go with the same payment you're paying now. So that's my kind of the tip of the day on what we're doing there. So one of the things the Fed came out when we had some hiccups in the market several months ago. There was a little bit of a shortage in what they call, and I won't get technical, bank lending or the repo market. So the Fed came back in and they started buying bonds and started adding to their balance sheet. In a roundabout way, just putting it in easy terms, they've added liquidity to the markets, thus also pushing down rates and less fear in the market. So the less fear in the bond markets, you're more apt to invest in those bond markets, and that's causing a good rally in mortgage rates to the good. So you're going to see here, Fed doesn't do anything. The markets love it. They didn't come out and say, you know what, we're going to push up rates. We're really monitoring this. They're saying employment's good, but we're going to monitor it. This virus thing over in China, we're going to monitor it. And if we see, a big retraction in the economy, in the world economy, in the U.S. economy, we can easily step in and do some monetary policies to help in this scenario because the inflation rates are in check. So that was big news. Inflation's good. And the Fed's sitting there saying, you know what, if needed, we'll jump in and help the markets. So that's where we were today, and that's what's happening. So you got my tip of the day. Look to refinance. Even if, just call me. There's no high-pressure sales. I'll say, you know what, send me a copy of your mortgage statement. That'll give me all the details there. When did you close? So let's see what time duration you have. We might be able to cut off 3, 4, 5 years on your mortgage payment and make your mortgage payments go down. So there's a whole variety of things you can do. So if I can be of any help to you, let me know. Telling you a little bit about me. My name is Dan Frio. I do the mortgage update every day on YouTube, so don't forget to give me a thumbs up. Subscribe down below. You can also, if you're in the Chicagoland area, you can hear me on WYLL radio weekdays at 7:30 to 8 p.m. You can also hear me on WIND radio. That's in Chicago, Saturday mornings from 7 to 8. Check me out on just Google the mortgage update with Dan Frio. You're going to find my YouTubes. You're going to find me on LinkedIn. You're going to find my Facebook. You're going to find everything, Google reviews, Zillow reviews, everything you can find out about me. I hope you like what you see. I can do about 2/3 of the country. So if you're out there in California, Arizona, Colorado, the Carolinas, Florida, anywhere in those areas, call me. I'd love to help. Actually, I'm going to be in Florida the end of this week and the beginning of next week. I'm going to be in the Cocoa Beach, Cape Canaveral area. So if you're in those areas and you're a realtor, maybe you want to set up meet, have some coffee, and just talk about how we can help partner together to build your business. I'd love to do that as well. So if you want to reach out to me, call 844-775-LOAN. That's 5626. Shoot me an email at dfrio, and Frio is Frio, at parksidelending.com. Or shoot me or check out my website. Sorry, my phone's ringing off the hook. thefrioteam.com, and I answer every email there. But also, please don't forget to subscribe down below. Leave me a comment. I answer every comment. You can check every video I have and every comment that's there. I've replied, and I'd love to help if I can. So thanks again for watching. God bless. I'll see you again soon. Bye-bye.